It's been a wild week for Opendoor, but the narrative might not be what the chart tells you. On Friday, Dollar Open dropped sharply, down about 7%, closing the session at $7.57 a share. To some, that looked like a crack in confidence. But for those watching closely, something very different happened behind the scenes. As broader markets tumbled on renewed trade war fears, one of Opendoor's most visible supporters, Anthony Pompliano, came forward on X to say that he had bought more shares during the sell-off. His message was clear: he has stronger conviction than ever in the company's direction. That statement might sound small in isolation, but in the market we're in right now, where sentiment swings wildly, conviction from people with long-term vision carries weight. Pompliano didn't just hold his position through the drop, he doubled down on a red day when most investors were retreating. And that right there captures the essence of what's happening with Opendoor. This is a company doing nearly everything right: cutting costs, refining its model, integrating AI, and strengthening leadership. Yet the stock continues to get swept up in the broader market's volatility. What we're seeing is the tension between fundamentals and sentiment. Fundamentals are improving. Sentiment is lagging. Let's unpack that. The sell-off on Friday wasn't about Opendoor's business. It wasn't about a new filing, a downgrade, or a change in company direction. It was driven by macro, specifically, renewed headlines suggesting that Donald Trump, now the clear Republican frontrunner, would impose heavy tariffs on Chinese imports, especially in tech and rare earth materials. That headline rattled markets late in the session. Tech names got slammed, small caps followed, and high volatility growth stocks like Opendoor bore the brunt. When traders panic, they sell what they can, not what they should. That's what happened Friday. But in that moment, while the market was in liquidation mode, Pompliano stepped up and said he was adding. That single message reframed the conversation. He's been a supporter of the company for some time now. He understands the macro pain, but he also sees the long-term potential, a company transforming one of the largest and slowest industries on Earth through technology. That's what makes his renewed conviction notable. It wasn't reactionary, it was rational. He's looking past the noise and doubling down on the future. Now, let's look at what that future actually looks like. Inside Opendoor, momentum hasn't slowed. In fact, it's accelerating. Nejatian, the company's CEO, continues to communicate directly with investors and the public in a way few corporate leaders do. His tone is transparent, sharp, and execution-driven. This week alone, Kaz talked about Opendoor's AI-driven cost discipline, revealing that the company is using internal tools to cancel redundant SaaS contracts across departments. In one case, he said they're cutting from 10 external providers down to just one, plus their internal AI solution, saving millions of dollars a year. That's what true transformation looks like. It's not just about selling more homes, it's about building a smarter, leaner operating engine. Kaz's posts highlighted something profound. Opendoor isn't just using AI as a buzzword. It's embedding it into its DNA, cutting waste, automating tasks, and creating a culture of accountability and efficiency. And that comes on top of the recent leadership upgrades. The company has brought in John Legrice from Shopify to lead operations, Morgan Brown from Dropbox to lead growth, and Brad Borney as Chief Business Officer to drive partnerships and expand builder relationships. These are serious hires, experienced leaders who know how to scale systems and build high-performance teams. When Kaz calls it an over-the-air upgrade to leadership, he's not exaggerating. This is a company aligning itself to run like a world-class tech firm. So on one side, you have fundamentals strengthening, cost control, leadership alignment, and strategic clarity. On the other, you have sentiment swings driven by macro headlines. The question is, which side eventually wins? Historically, it's the fundamentals. Opendoor is in a position similar to where Carvana was a few years ago. Misunderstood, oversold, but operationally improving. Or like Palantir, which traded sideways for months between $8 and $18 before the AI boom sent it above $150. These stories all share a pattern: quiet accumulation, narrative skepticism, then a breakout when the market finally connects the dots. That's why Pompliano's move matters. It's not just symbolic, it's an indicator that the smart conviction crowd is still accumulating, even as volatility shakes out weak hands. And right now, Opendoor doesn't need hype. It needs time. The pieces are already in motion, the catalysts just haven't hit yet. Let's talk about what those catalysts are. First, we've got the next Federal Reserve rate decision coming up. Any signal of dovish intent or an eventual rate cut could reignite the housing narrative almost overnight. Mortgage rates have been one of the biggest headwinds for Opendoor, but they won't stay this high forever. Even the slightest easing could open the floodgates for new buyers and sellers, and that's where Opendoor thrives. Second, Q3 earnings are set for November 6th. That's a little over 3 weeks away. If the company shows measurable improvements in gross margins, cost savings, or transaction volumes, the narrative can flip quickly. Investors want proof that the internal changes Kaz has been talking about are translating to numbers. If those numbers confirm the direction, sentiment will follow. Third, September housing data is on the horizon. The last batch of housing numbers hinted at a modest uptick in existing home sales, a small sign that demand is stabilizing. If that trend continues, it feeds directly into Opendoor's core business model. And beyond those, there's always the AI and automation angle. If we see any new product updates about Ernie or Chloe, Opendoor's internal AI agents handling buyer and seller inquiries, that's another potential spark. These AI tools are designed to solve real bottlenecks in the real estate process. Show the world that they're working, and suddenly the story evolves from potential to proof. So yes, in the short term, the stock is down. But the story isn't. The company's execution has been consistent, the leadership team is stronger, and conviction among key holders, like Pompliano, is growing, not fading. Think about what that means. If you zoom out, Opendoor's biggest challenge right now isn't operational. It's emotional. The market hasn't caught up to what's actually happening internally. We're in a narrative lag, a period where perception hasn't yet priced in progress. These moments can feel frustrating, but they're also where long-term investors quietly build their positions. Because when catalysts line up, when rates ease, housing data improves, and execution shows up in the earnings numbers, the market has no choice but to re-rate the company. That's why this weekend's message is about reframing. The stock may be red, but the direction is clear. The company is building leverage, financial leverage, technological leverage, and leadership leverage. And while the market worries about tariffs, the Fed, and short-term volatility, Opendoor is preparing to win the next cycle. Remember, this is a company that has already proven it can survive the toughest housing conditions in decades. It went through the macro storm of rising rates, declining affordability, and sluggish transaction volumes, and it's still standing. In fact, it's stronger because of it. Every optimization, every leadership shift, every AI tool deployed, it's all compounding beneath the surface. So when Pompliano says he has more conviction than ever, that's not empty talk. It's a reflection of the structural progress happening behind the scenes. He's watching what Kaz is doing. He's seeing the discipline, the cost management, the speed of transformation, and he's betting that once the market stabilizes, those fundamentals will shine through. For long-term investors, this is what accumulation phases look like. They're uncomfortable, noisy, and full of red candles. But they're also where conviction gets built, where strong hands outlast the uncertainty. We've said it before, sideways and down moves are often the setup before the breakout. The market shakes out the impatient to make room for those who understand the story. Right now, Opendoor is writing a story that blends housing, AI, and real-world scale in a way few companies are attempting. The stock doesn't reflect that yet, but it will. So heading into the new week, the message is simple. The fundamentals haven't changed. The leadership hasn't changed. The innovation hasn't stopped. The conviction, if anything, has only grown stronger. We've got major catalysts on the horizon, a Fed meeting that could reshape sentiment, housing data that might confirm stabilization, and earnings that could translate the story into numbers. Add in rising conviction from key investors, and we've got the foundation for a powerful turnaround narrative. Opendoor doesn't need a miracle, it just needs a moment. And when that moment comes, those who kept faith during the chaos will be the ones rewarded. So don't let Friday's red candle define the week. Let conviction define it instead. Because while markets fluctuate, conviction compounds. And that's exactly what's happening here, inside the company, inside its leadership, and inside the investors who still believe in what Opendoor is building. This isn't about hype. It's about direction. And if the company keeps executing like it has been, that direction is only pointing one way, forward.